Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and today I've asked Andrew Corbett to come back and give us an update. Andrew is the Managing Director of Kingston Resources. The ASX code is KSN. Now, for those of you that aren't aware, they are in production. Whoop, whoop. Big hurrah there, and they are doing record gold production. They've got this project out near Cobar. It's called Mineral Hill. And it's actually the gift that keeps on giving. And I'm not going to give all the joy away, take all the joy away from Andrew. Andrew, great to see you. Welcome back to Small Caps.
Thanks, Kerry. Thanks for having us back. It's been well over 6 months, so it's been a busy time. It is very nice to be a gold producer at the moment. January last year was our first putting our toe in the water of being a gold producer. Yes, it is a tailings project, and I can tell you right now, we're very, very happy with it. It's progressing better than what we thought in terms of both monthly production, and we're pushing the costs now lower. Even with the inflation that the whole industry's felt, we're now pushing the costs below where we thought we were going to get them before the big inflation pulse. So project was always going to do this 12 to 1400 ounces a month. We averaged, we did 1700 last month, so we're beating that. And last quarter was all in sustaining of just over $1,500 Aussie an ounce. So the project is generating very good free cash flow. So it's all, devil's in the detail. I understand investors look at quarterlies and go, yeah, well, how much cash are they really producing? But our cash went up 40% quarter on quarter.
Oh.
Yeah, so we went from 6.8 to 9.5 in the last quarter. And I can assure you now there was no games getting played with the quarterly result. We're holding that cash and expect to improve it this quarter. So, yeah, it's doing a great job. So, for a tailings project to be paying for Kingston head office and for Misima, and we're still growing our cash.
All right, well, can we take a step back? Just remind our audience of why you picked up Mineral Hill, because there was a focus on the Misima project, but then I guess you saw this Mineral Hill project and thought we can take it. That's the first one. I want to know why you decided to jump into Mineral Hill. And I guess the second half of that question is tailings. Why you decided to get into production with tailings. It's an interesting way.
Absolutely. So if you step back, our vision is to build a mid-tier gold company, and we'd like to have 3 producing mines. We see Misima as sort of number 3. So what we decided as a board and as a company was we knew we had this great project, 20-year mine life, 120 to 150,000 ounces a year. It's an amazing asset, but Kingston still was a minnow, and we still are a micro cap, right? So we needed to grow Kingston into Misima. So our strategy over the last couple of years was to buy a producing Aussie gold mine, Aussie and gold and precious base metals. So, gold and copper, basically. Now, we did that with Mineral Hill. It took a long time to get the transaction. It was an unloved project. It wasn't doing well when we came in. It was burning cash for the first 4 months that we owned it. We've turned that around. We've lifted the throughput. We've improved the recoveries. A lot of hard work by the site team. Jeff Merrill's the general manager. He's doing a great job. It's his first time as a general manager, so it's a big tick for him and the team. It's our first time as a gold producer, right? Kingston. Yeah. So we wanted to prove to investors that we're not just an explorer and developer, that we can operate a gold mine. So Mineral Hill was our first step. So yes, it was in production, and we thought we could turn it around because it wasn't delivering. So that's why we did it. Okay.
Why wasn't it, sorry to interrupt you, Andrew, why wasn't it delivering?
We're having a lot of problems with throughputs and densities. So what we did was helped the side team basically lift the energy. So it's all about, drill and blast for a normal open pit, but in this case it's actually a water cannon. So we lifted the water pressure, got the densities up, got the throughput up. So we went from 55, 60 tonne an hour to 100 tonne an hour. Wow. And that's been the key. So significantly improved throughput, densities and recoveries, and the grade's been great as well. So the grades, we're getting a positive reconcile on the grade, which is a nice benefit. So that's worked. We've got about another year of the tailings project. Okay. But our current on top of the fact we wanted to become a gold producer, we also think that the 2 exploration licenses that we sit on, ELs that we have, and the MLs we have, are some of the best ground in New South Wales. Underexplored, a lot of opportunity. We've got a lot of drill targets. It's fully approved. It's an operating plant. We're long water, so we don't have water problems, which we all know are a challenge in New South Wales. We've got 2 tailings dams. One we're mining, and once we finish mining that, we'll use that for the next round of open pit and underground mines. So we've got everything we need. We're a residential workforce based in Condobolin, so we're not FIFO. So all of those things are what we needed to have in place to make Mineral Hill successful. Very supportive local shire and local community. So tick, tick, tick from our point of view. The asset was owned by a family called Quintana, or the company called Quintana, which is a family office out of Houston. They were investors, so they weren't mine operators. They couldn't operate it successfully from Houston. So they were a logical seller. We're a logical buyer. We're in New South Wales. So it's gone really well. We couldn't be happier with the progress there. So the next step, so we're in stage 1 at Mineral Hill. Cash flow, positive free cash from the tailings project. And that's the key. It's not just operating cash, it's free cash flow. So that's the key. The next step is to grow. We think we can double the production at Mineral Hill. We're working on that right now. We're going to update the market on that in the next few weeks. And we have delayed it because we have had, there's been a few iterations of the mine plan. So we're very happy with where it's at. We expect to have a 6-year mine life, pushing towards that 35,000 ounces per annum. So that's double what we are doing. And we see we can maintain that comfortably for 6 years. So that's stage 2, and that's what we're working on right now with Mineral Hill. And then we talk about already internally and starting to demonstrate to investors stage 3 is how do we grow Mineral Hill to a 50,000 ounce gold equivalent. This will be because it will come with copper, zinc and lead, so it's polymetallic base metals. How do we grow to 50,000 ounces sustainably for a 10-year mine life? And that's stage 3 for Mineral Hill. And that's what, we're finishing stage 1 now, we'll get into stage 2, and then we start to look at growing from there. So that'll be from exploration on our own targets and on our own ELs, but also starting to look at other assets or resources that are in truckable distance to Mineral Hill.
You said you've got a plant there, right? Well, obviously you do because you're processing the tailings. Yes. Are you looking to have other, maybe perhaps some stranded assets? What are other infrastructures around there? Are people looking at what you've got and saying, let's use it?
Yes. Well, I don't know if they're actually saying that, but we are starting to look around at where we are and, in that 100K radius on roads, existing roads, what's available, what resources are there? Because, a 1 million tonne resource of good grade gold or gold and copper ideally is perfect for us. So that just tops up our own feed. So our current resource base is 8.9 million tonnes, and the plant's only a 350,000, 400,000 tonne plant. So we already think we're going to get a 10-year mine life together, but we want to push the plant from 350,000 tonnes towards that 500,000 tonnes per annum, because that gives it scale. That's where it starts to become really accretive in terms of earnings.
Does that mean that you've got to do an upgrade to the plant though? Is there a cost to upgrade the plant, or can you just...
Yeah, but right now we're not at that point. So we're just going to maintain this 350, 400,000 tonne per annum number until we get the resources together to demonstrate that. So that any upgrade is going to be down the road, and the plan will be that the mine self-funds that. So that's what we ideally what we want to do. It's what everyone wants to do, right? To be able to self-fund your growth. So it's a really good transaction. It's going very well, and it's all about growing Kingston into a mid-tier gold producer with that. This is asset number 1. How do we keep growing from this first asset to get our second project and ultimately build Misima? Misima is interesting, right, for shareholders today because the gold price is moving. Costs are coming down. The inflation is settling down. In the future, maybe we're going to revisit the Misima DFS and reprice that capital number, because we priced that in the middle of 2022. Inflation was probably at its worst. So we need to reconsider that, and when we do that, and also what's the best way for Kingston shareholders to benefit from Misima? It may be a joint venture. So yeah, we announced that we were looking for a partner last year, and that hasn't changed. Last year was not the right time to be doing things in gold. You know, no one was making money. The gold guys weren't. None. You know, we saw. You could see all the share price charts from last year. You know, people weren't interested in talking about building a new gold mine last year.
No, Andrew, it was the perfect storm. You had inflation. You had no one gave a toss. The gold price was fairly flat. But, you know, we're now, you know, you say that inflation's come off its peak. Yeah, I guess it has, but it's here to stay, you know. So I think
it is, Kerry, but I can give you some examples. So our reagents are down 4 to 5%, 2 quarters in a row. So it's now starting, you know, we're getting close to 8 to 10% down on reagent prices. So that's over the, you know, the last 2 quarters. So that's what I mean by things are starting to settle down. You know, just ordering parts, pumps, equipment is just a little bit easier now. Lead times aren't quite as long. Drill rigs, there's a lot more drill rigs available. So things are settling down.
Okay, well that's good.
Freight, sea freight.
Yeah, sea freight's come off a lot.
Yeah.
I just want to understand, if I could, for our audience, Andrew, is we've spoken Mineral Hill, we've spoken tailings. Where's the focus is on the tailings dam? That's bringing in that free cash flow, but that growth strategy. I just want to understand that growth strategy and more on the timing around that. So
yeah, no, that's a good question. It is important. So the tailings goes until March, April next year.
Okay.
At which time we have 2 open pits, which we've published already in reserves. They're called Pierce North and South. 3.5, 3.7 grams per tonne gold and about 45, 50 grams silver. So high-grade gold and silver. They come online at the end of the tailings. They run for about a year. So that's basically going to double our production just there alone because the grade's so much higher than the tailings. The tailings is about 1.1 grams, 1.2. So that uplift comes April, May next year. So it's less than 12 months away in terms of lifting the production base. And then we have the underground at Mineral Hill. So there's already 2 declines of 2 portals at Mineral Hill. So we're going to be bringing the first underground back on, which is called the Southern Ore Zone. And we think we've already got the first 4 years mapped out, which we're in the process of finalising that life of mine now. So the underground's got best part of 4 million tonnes of resources already.
Okay, that explains a lot. Okay, so this is really, so if I just take a step back, the people that you took it, that it was a family office, if you like, based in Houston, they really didn't understand how to get the value from Mineral Hill. It was there all the time.
Oh no, I think they did understand it, but it was difficult for them from Houston. You know, they have a mining background. That's why they originally invested. They understood what they were doing, but it was middle of COVID.
Yeah. True.
So we started to talk to the Quintana family in I think it was October 21. No, it must have been 20. I can't even remember now. Sorry. Anyway, so it was difficult for them to be able to drive the strategy from Houston without having a Sydney-based team or a New South Wales-based team. But that's right. So if you step back and look at it, we already have the reserves for the open pit. We already have the resources for the underground that build out this 6-year mine life. The 2 declines are already built. Yes, we will need to do some underground development, but majority of the capital is sunk for the next 5 to 6 years.
Okay.
So it's a very interesting position that we're in.
With the, what are the all-in sustaining costs? Because I'm talking to you in, I can't believe it, Andrew, it's May. What the heck? May 2023. We've got an Aussie dollar gold price of 3,000. All-in sustaining costs at Mineral Hill?
1,540 for the last quarter.
Okay, so that's a nice turnaround.
Yeah, and absolutely. So, you know, when we came in, it was sort of mid-2000s in terms of all-in sustaining costs. So we weren't making money at the start. We're down to mid-thousands now, you know, 1,100 now. So we're making good money. And the evidence is it's in the bank. So we went from 6.8 to 9.5 quarter on quarter. And I think that is really important because, you know, people want to see cash.
Yeah, and it's not dilutory to shareholders.
That's right. That's right. And growth is important to us, right? So we do want to grow. I don't want people to think that, Mineral Hill's the only story for us. We see growth organically from our current 2 assets, both Mineral Hill and Misima. And look, ideally we would love another mine in the middle there type thing. So
how do you find the mine? I love this. How do you find the man in the middle? I mean, the mine in the middle. What are you looking at?
Well, I can't tell you that.
Well,
look, it's just, it's hard work. You've got to look for these things. It's like, how did we find Misima? It's how did we get Mineral Hill? You've got to do the work and be looking for these opportunities.
The area around Mineral Hill, because you said a little while ago that you've got mining, exploration lease, but you also got mining leases, yeah? So where are they? So they're the open pit and the underground at the moment.
Yes.
Talk to us about exploration. Are you putting much of an emphasis on exploration around the area?
Yeah, so we've just started really on the exploration front. So we've taken, I guess we've had it 18 months or a bit less now. So we're now getting to the point where we're getting ready to drill the new targets. So most of the drilling to date has been on resource definition and infill. We currently have 1 diamond rig on surface doing exactly that, some geotech and some resource drilling. But we're about to get another rig to start some RC and do some exploration. And that exploration, the focus there is sort of 2-pronged in that initially right next to the mine, continue to build that mine life out and then start to step out to maybe, is there a new mine here? Do we have our second mine in our own portfolio, in our own tenements? So that's the next step. So right now we have 5 to 6 targets right next to the mine, all within 2 to 3 km of the processing plant. And most of those are in on the MLs.
Oh, nice. Okay.
And then the surrounding the MLs is a smaller EL, which we're then going to start stepping out on and drilling, because once you've got an approved mine with a mining license, it's actually not that hard to get an extension to the ML.
Yeah.
It's getting that mine approved. So that's going, I'm very confident that there's something else in this tenement package. There's too many current known resources for there not to be any more. So,
how deep are you at the moment, that current decline and also this open pit? How in other words, what I guess I'm asking is, do you think there's a high grade source deeper? So I want to know how far are you drilling at the moment?
Our current underground resource is about 300 metres.
Okay.
So very shallow. The decline goes down to that depth already. No, so we do see the southern ore zone is open at depth and in one of the directions, I'll get it wrong here, east, I think. So it's still open. Then right next to the southern ore zone is the second underground called Jack's Hut. We've already published a small resource on that. That's all still to be drilled. And then we're looking for repeats of these 2 undergrounds. So historically, there's actually been 4 undergrounds within a 2 kilometre strike length, and we're only looking at 2 of them at the moment. So there's going to be other extensions or more or a new one. So we just need to do the work. Yeah.
So I guess it goes back to my question: are you going to go deeper? And do you think that there's, are you looking for maybe a high grade source of where the gold's coming from?
Our priorities actually are right now to go along strike and not go deeper. We've got a lot of targets that potentially could be little pits and undergrounds. So not necessarily that much deeper. Like a lot of Cobar goes down a kilometre, right?
Exactly.
Mineral Hill's at the moment about 300 metres. So there's still all that to be done. Whether it goes down the kilometre, I don't know. There's no holes down there. People haven't chased it at depth. But we will be looking both to extensions to the current resources and new resources along strike.
I think there was an important point that you made just a little while ago, which was when you took it over, the all-in sustaining costs were mid-2s and you got it down to mid-1s.
Mm-hmm.
Can you just explain to our audience how you've done that? Because that's actually very significant when it comes to, I guess, the profitability of Kingston.
Oh, no, absolutely. No, it is literally lifted the production. So, we were, when we came in, I think they were doing 600, 700 ounces a month. We're now doing 1,500 ounces a month. So doubled the production and pushed the throughput, lifted the recoveries. So that's really, it's been quite a well executed strategy by the site guys. We sort of knew where we wanted to go, how we were going to get there. And it's just taken it took a few months to obviously deliver. We also had a lot of rain last year, so we had to work around the rain. So, and Mineral Hill, obviously it did stop us at times, but there was no damage from rain. We didn't have any flooding. The access road got closed for 2 days for the whole of last year. So it was, for the record rain that we had, our impact was very low. No, so it was about lifting production and at the same time focus on costs, just rip out whatever costs we could. There wasn't a lot to take out because it's a small site, small workforce. We've got 60, 65 people. It's not like down the road at one of the bigger mines where they've got thousands of people.
Yeah. Okay. Well, Andrew, I get Mineral Hill now, and congratulations, because you're on the right track. There is a clear strategy for growth of that area, and that's only going to do good stuff for Kingston. But it would be remiss of me before finishing up without just going, you mentioned Misima, which is in Papua New Guinea, that you're looking potentially for a joint venture partner. Is all the focus now on Mineral Hill because it is, it's a cash
generator? It's not. So if you look at our we've got about 100 people in the company. About 65 are at Mineral Hill, 30 odd are on Misima. So we're still progressing the approvals at Misima. But the very short-term focus is obviously ramping Mineral Hill up to stage 2. What do we need to put in place to double production? So that's over the next quarter or two. But later this year, we need to re-kick off the strategy around Misima is going to get built. How does Kingston and Kingston shareholders benefit from that? So that's exactly.
Sorry, why are you so confident that Misima will? Because you're like, Misima will get built, not might.
It's an asset that's produced 4 million ounces already.
Yep.
We currently have a reserve of 1.7 million ounces reserve and 3.8 million ounce resource at Misima. It is a very low cost open pit operation because of it's very soft, very coarse grind, very low energy to extract the gold. So it will get rebuilt. But at the moment, the capital ratio doesn't work for us because we're a $45 million company and the capex for Misima is 470. So, it's silly for us to even pretend that we can do that on our own.
Yeah. At
this point. So our strategy is to find a partner and retain exposure to the project as much as we can. If gold price keeps going up, we keep growing our margins at Mineral Hill and we keep growing Kingston, then maybe we can build it on our own. But at this point, it's not something that we're even pretending to do with people. It's a great project. It will get built. I mean, at $2,500, $2,500 US gold price, it's 1.3 billion NPV.
Wow. Okay. Yeah, so it's considerable.
It's a big project. Even right now at 1,800 US, we did it at the NPV is $1 billion, right?
Yeah.
800 to 900 million. So it's a big project. It will get built. It's brownfields. It's geologically very well understood, metallurgically very well understood. Standard, simple, big open pit. It's a bit of a rock factory. It's all about tons movement. Not dissimilar to Karlawinda in Western Australia, Mount Gibson with Capricorn. These guys are, the grades are heading under 1 gram. Gold Road, I mean, these big open pit projects, very successful in WA. Misima was very successful for 15 years and produced 4 million ounces. So I'm pretty confident it's going to do it again.
All right. Well, we're running out of time, Andrew. So I have to ask my obligatory 3 reasons why people should be sitting up and taking notice of you right now. I think we've given them about 15.
Yeah.
Make you say just 3. And by the way, ladies and gentlemen, if you want to come and meet Andrew in person, in the flesh, and, ask him all the questions you want, he'll be at the Australian Gold Conference at the end of August in Sydney. So that's a face-to-face for you instead of on Zoom. But for now, Andrew, let's wrap it up with 3 reasons people should sit up and take notice.
Generating positive free cash flow, growing production, and a lot of exploration upside.
Love it. Nice, succinct. That's exactly what I wanted to hear. Andrew Corbett from Kingston Resources, congratulations on getting Mineral Hill, getting those all-in sustaining costs from 2.5 to 1.5. That's impressive. Good generating good cash flow and a bright future ahead. We'll see you soon. Thanks for joining us.
Thanks, Kerry, and go the gold price.